Good morning, guys. Welcome to this Thursday, February 13th. And we got just the holding pattern going on, I think. It had a pretty strong close yesterday, a nice overnight. A little bit of weakness going into the London session. We got some stuff going on here right now in the since the 6:45 hour. Nothing really new on the news docket, which would cause that. Could be a foreign piece of news or something, but it's sparked some volatility there, but it's pretty much holding on. And today, a big piece of news today is going to be the PPI and the jobless claims numbers, primarily the PPI read. Usually not as crazy as the CPI reaction, but it could be. So we'll see. So jobless claims, PPI coming out at 8:30. We have a nat gas report at 10:30, and we got a 30-year auction at 1. So that's what we got going in today's trading. But I think at 8:30, the jobless claims and the PPI is going to be the bulk of the news for today. We'll see how the day shapes up. Yesterday was a pretty interesting read, though. All the corrections and stuff, the reaction was so negative, and then it actually completely reversed throughout the day. And support held in the key support area. So we are just back range bound, and that's kind of where we end up. So as you can tell, we are trading range bound at an upper at these upper levels, and we're just going to start off the same way. So yesterday's trading pretty much a back and forth. Today's trading, you can see the upper edges are still at the 6100s, the lower edge has a 6020, and as you approach those, you get better resistance, better support. So there you go. So starting off range bound, looking to sell strength, 75s, 85s, up to the 95s. 6110 would be the last one, that low volume area. If that comes out, I would lean in on the long side. Looking to buy weakness, 60s, 50s, 40s, 30s, 10s, 15 to 20s. And that would be pretty much the lower end and the lower range of this. I could adjust this one a little bit higher, just like that. I mean, as you can see, oh, hang on. There you go. Here's our lower end. So here we have the drop back from yesterday's day session low. That's this 20s. And it's just a back down at this lower end, the high volume of the mode of this bigger distribution. This is a 90-day distribution, and the mode of that distribution is at 6020. That's the highest volume node we have for the last 90 days. So, no, sorry, 180 days, 180 days. So that's a pretty good testament that the most of the volume is happening at the upper end of the range, consolidating pretty hard. And since they haven't really pulled back hard, there have been a couple of scares on the downside, and we have headlines come out, but so far they're holding this range, and I'm thinking they're setting up for another leg higher. It doesn't matter what's gonna kind of trigger that leg higher. If they can't extend at one point, if we get bad news or something kicks in, we definitely have a shot at potentially taking out the lows and potentially retracing a bit. But so far, they've been buying that and has been defending that level pretty darn hard. So that is a pretty good sign. So support here at the 20 to 40 area has been holding up pretty good. And we're just going to keep relying on that one until a piece of news or something happens and they bust through it. And that could be one of those days where you just kind of hop on the short side and stay in for the ride if you can. So that's how we get started. Range bound trading on the ES. We're still trading in that upper range. So looking for short setups against the 75s, 85s, 95s up to the 6100s. Sorry, 6110s. Rotations back down, and looking to get long against the 60s, 50s, 40s, and then we have the 30s and the 20s below that for rotations back up. And if they take out that lower edge, the 20s, I would lean in on the short side a lot harder. Below 40s, I would be a little bit less aggressive on buying it, but it's still buying opportunities down here all the way down to the 20s. So pretty much the same analysis as yesterday. We are in a holding pattern, waiting and digesting all these tariffs and stuff coming out. But as you can tell, the reaction to this stuff is not as crazy as it was initially. Oh my God, a tariff, a massive sell-off. It's like, no, it's people they're getting your market is kind of getting used to the speed and stuff. Things are happening, and you just have to watch what's real and what's just hyperbole. All right, so on the bond market, starting a retracement, but that reaction to the downside. So we started on the downside in the overnight. We're looking to get short against the 22s, above the 22s, looking for a retracement trade. So far, yeah, we probably a little bit to the upside, 28, 29. So we have a 114 ledge right a little bit above it. And I should actually have this on a little bit higher there. We want to be at the 114s like that. So right there at the 130, 113.30 to the 114s is where you want to be. Looking for short setups for rotations back down again. At this point, I mean, I'm going to start looking for a potential retracement trade. If this was overdone, the bond market could certainly retrace this pretty easily. But at this point, we're going to have to start from the short side, just given that we had that reaction to move out of the middle to the downside. You kind of have to trade it as such until you get different piece of information. And today you have PPI coming out, so definitely want to be you definitely want to be on the short side of this until that news passes. So looking to sell against that 114s. If they take that out, I would be looking for a retracement trade all the way back up into the 114.16. Could be a nice long trade on the bonds on that one. And if they take out the lows here at the 113.16, just stay on the short side. They're going to try to take it lower at that point. So the bond market definitely repriced to the downside. Yields coming up. And that higher inflation, higher yields, that goes hand in hand. I mean, that's a natural reaction on the bond market. You have a high inflation expectations. People want to have a better return for the long-term money because obviously the money is going to be worth a lot less down the road. That's the whole point. So NASDAQ also in a pretty good spot. They retraced. We're down here at that the 500 level in the overnight. Yesterday's news reaction in the overnight, they have not really pulled back a whole lot. They're still holding it against these upper areas. So I would start off range bound. They are right at that edge. So that would start with a slight bias to the upside on the NASDAQ. See if they can take out the 860s and maybe even get up above this. The overnight was trading above this 860 level for quite a bit. The London session kicked in and they dropped it down below it again. So here is where we were trading yesterday. They start taking out this area, the 750s. I would be looking for a retracement trade back into this lower range again. So fairly aggressive on taking off that long bias, going back range bound. And so below 750, we're back range bound, looking for a retracement. Still looking for potential buying opportunities against these lower areas. So not unless they start taking out the adjust that guy again with that three little edge right there. So not unless they start taking out these lower areas, just one thing here, I'll take this guy out, and this one's pointless there. This is not, as you can tell, I took this guy out right now. As you can see, there's no real edge here. A little bit of volume there, but there's no real edge. There was there before, but at this point, it seems to have been, it's not as obvious, so take it off. There's a much better edge down here at the 580s. So if they run below this area, the 750s, we have a shot at retracing it all the way down to test these lows at this 570, 580s and the 540s. So definitely range bound, looking for potential retracement. So kind of not leaning short, but looking for that retracement back down again. So it could be a nice short trace in between. Still looking for buying opportunities against 700, 650s, 580s down to the 540s. And below 540s, if that level comes out, I think at that point bets are off. It's not going to be at that point bets are off, and I think we have a bigger problem going on. Scroll this guy back up, and I was adjusting this one right there. So adjusted this one right here, this edge. Get it a little bit up there. Where are you? Oh, I got you. I got the different thing going there. Hang on. There you go. So that's what I wanted to do. I wanted that edge to touch these guys, the 500, 510s. So here you have the buying opportunities, the below the 540s and the 510s. bets are off, and I think we can head all the way down to the low 200, 21,200s at that point. So that would be a rough day if that kicks in. But at this point, looking to buy against weakness down to that 740s. So they're trading right at 800 now. So the first one to buy against is down at the 740s. below that one, take off the long bias and then go back range bound. Still looking to buy against these lower areas until they take out that 540, 510 level. But at this point, take off the long bias below the 740 to 50s and look for retracement to the downside. And let's see how this reaction comes out. Now, yesterday we had the Newsday reaction on the PPI. So that's the kind of stuff you're looking for if you're looking for a directional move. It didn't turn out to be a very big directional move because the initial move was about it. But that's kind of what you're looking for. So if you have volatility, but not necessarily directional, that's when you fall back on the analysis, just that like you have right now. This is volatile, but not directional. So you're looking at pretty slow stuff, a big volatility going on. That is a kind of dynamic. That would be a volatile, but not directional move, what you're looking at right there, right? So we're looking for that on the PPI. If it's volatile but not directional, we just fall back on the analysis and look for buying opportunities down to 740s. Below that one, take off the long bias. All right, so that's NASDAQ. And then finally looking at oil and gold. And gold is right back up again. These guys have been net buying gold. I mean, someone is buying gold for sure. And it's exactly why there's such a scare and run on gold is kind of interesting. But as I said, it was concerning to me because I don't see that geopolitical craziness happening. I'm seeing them settling that. There's a lot of stuff which is being settled, but it's not a lot of new uncertainty being created. Unless you're freaking out about, tariffs, I guess. So at this point, gold right back up again, up above this area, the 35s, and this is the area we talked about. We were looking if above that one, we get back on the long side, and that's exactly what we are right now, back on the long side of this. See if they can take it higher. And so buying gold at the 35, 36 level. It's a fairly wide range. I made it a little bit wider because they're so volatile. So from the 34 up to the 36, 37, see this area of support. Look to buy against this area. And if they take it out, just go back range bound. So fairly aggressive on taking off the long bias on gold as well. The tractor is down here at 29.30. And I would say 26 to the 35. This is the volume area. That's your attractor. If they start trading below that, I would still be looking to buy it against the 27s, against the 18s here. But below the 18s, I would be a little bit less aggressive, looking for more of a retracement down and down again. So buying against the 35, 36s, the 26, 27s, the 18, 19s for rotations back up again. But if they trade below the 36s, take off the long bias. And if they start taking out the high here, the 49s, just look for a potential, look for a move to the upside. At this point, I'm not going to be very aggressive on the short side on gold. They're definitely they're crazy volatile right now. So I'm just kind of sitting on the sidelines. I tried to trade it a few days back, and now you can see what happened there. That was ugly. You get caught, it's shaking out left and right. And then finally, oil, slowly grinding down. That's what's going to be happening on oil. So I haven't been very aggressive trading oil either. It's been a lot of cross currents there as well. But if you look at capital flow in oil, it is slowly grinding to the downside. So they're down here at this mode right now at the 70-20, so 70s. They take out this edge, you're going to be right down in this lower area, and then we can watch this volume edge. That's going to be the key thing. Between 66 and 68 here, that support area comes out. At that point, it's going to open up on the downside. But so far, this little pop we had based on as part of the last administration before the all little stuff they were playing around with there, but driving up prices higher. They're all being reversed and changed and dropped and so on and so forth, and prices starting to adjust. So oil is going to keep coming down, just not in a straight line, and that is the key thing to remember. Just trying to get aggressively short on On oil, it's just not going to work well. You get these little pops. A piece of news comes out, you get a move like this. I would look for short opportunities though, but you just have to be mindful. Could be a couple of days of a pop, and you don't want to be, yeah, I'm going to get short, and just keep getting shaking out and losing money. You want to wait for it for the any pop like that to kind of peter out. Look for a decent setup. Try a short. If it doesn't work, keep your stop tight. If you get on a nice short trade, you'll be all happy. But they've been pretty sloppy back and forth, so I would be cautious about it. I haven't traded all just for that reason. It's been pretty sloppy trading, but sometimes you'll get one of those nice days on oil where it it really takes off and something happens structurally, and then you start seeing the market move up or down. But I'm thinking to the downside, it's going to be moving pretty good. But at this point, I would just trade it range bound. I would with a bias to the downside. At this point, I'm going to get short against the 71s, the 7130s, the 7175s, rotations back down. Yes, those three levels. And if it trades above that, the 7135s, 7175s, at that point I'll take off the short bias and go back range bound on this one. You see I have a couple of areas here. This area, that 7175 is a pretty good resistance area. All right, so that's how we get started on oil. Slight bias to the downside. Let's see if they can keep it going, or if we're going to get some a little bit of lift here at the open. So that's oil and gold. So oil from the downside, slight bias to the downside. Gold, slight bias to the upside. And watch that 36, 37 level on gold. They trade below that one. Take off that long bias. And back to the ES, and we got about 8 minutes before news hits. We still that volatility. I'm not sure what that's caused, that volatility, but it's a good example of volatility, but not directional, as you know what I'm saying. And yesterday's reaction, that was directional. There was no doubt about that. Directional, and that's in news day trade. You wait for the balance bar. You try to take the direction coming out of that. And if you're wrong on it, usually it works pretty good. Yesterday we got just a little bit of a continuation, and then they reversed it and it slopped around. Didn't quite go a whole lot lower, but it's sometimes it could set up a nice continuation move. So, alrighty, so we'll wrap it there for now. PPI jobless claims coming up at in about 8 minutes. So good trading, guys. And let's see how this whole thing pans out. So ES, range bound, NASDAQ, slight bias to the upside. Pretty quick on taking off that long bias if they trade below the 750s on the NASDAQ. All right, guys, good trading. I'll see you back at 11:30 for the next update.